Now I'm going to move to the middle part of the process and turn it over to the math guy in the room, Will Shu from Evolution Mortgage, to talk about lending.
Yeah. Thanks for the introduction, Jonathan. Like you said, my name is Will Shu with Evolution Mortgage. And, some of you that are tuning in, you might already have a home, so this might be a refresher. But for those of you that might be buying your first home, right, we'll kind of just go over the basics of, what's actually involved in, hey, what do I qualify for, right? So here are kind of the four major things that we look at. So we'll obviously look at your income, how much money you make, your liabilities, your credit score, which directly affects the interest rate that we can offer you, and assets, right? We need to know that you have enough closing costs, enough money for closing costs or down payment. And then, what types of loans there are, right? So we've got conventional, we've got VA, we've got FHA as well. There's also other ones, but we'll kind of just focus on these three basic ones. And, just keep in mind, out of the different types of loan products there are, your primary residence loans are going to be the ones that give you the best interest rate. Therefore, more affordable, and even the down payment is less on those compared to investment or second homes, right? So if we're talking about how to qualify for a primary home, you either have to have a job here, or if you already work remotely, then you've kind of got a shoe in the door, right? Theoretically, you can work from wherever. So you can move down here and qualify for a primary residence because your employment's not going to change. And again, that means you can get a cheaper, have a cheaper monthly payment because you're going to have a better interest rate.
That's good for everybody all around who doesn't like saving money.
Yeah.
Right. Makes sense. Primary loan, better credit.
All right. And, so how do we actually calculate what you qualify for? Part of that is going to be, what your monthly payment is going to be. And what does your monthly payment consist of? So we've got principal and interest, which is based off interest rate and the loan amount. And then we've got taxes. So specifically for St. Lucie County, right? We're very honest with you guys. St. Lucie County has one of the highest millage rates in Florida. It hurts my heart, to be honest, because, I lived in Savannah. My property taxes were probably a third of what I pay here. But it is one of the highest in Florida. And then obviously, you can see geographically, we're on the East Coast and Florida's known for hurricanes. So because of that, right, insurance is comparatively higher than other locations. And then if you choose to buy in an HOA location, then HOA is going to be part of your monthly payment as well.